Good morning and welcome back to the Retirement Report. All right, we've been talking about taxes this morning and trying to cover a lot for you to give you some good strategies in the time that we have today. One of the things, again, this is not a do-it-yourself workshop, okay? I don't mean for anytime when we're sharing strategies with you and I'm bringing information to you to help you with your planning, it's not with the intent of teaching you how to be your own advisor or to do this on your own. It's so that you know the questions to ask your advisors to get these things done. And to the other part, if you don't have someone, to seek out someone that knows these things so that you can get this kind of planning done, in partnership with them to make sure that it's done correctly and that we're not triggering other potential problems for you in pursuing these. And we're going to talk some of those. Roth conversions is one we'll get into as well. So again, if you don't have someone, then you can come see me at I'm giving you the number again, 615-376-5325. What we'll do is we'll do up a free comprehensive plan for you. All right, so when you come in to see me, we're going to send out a checklist. So when you call the number to my office at 615-376-5325, we'll get it up on the screen for you. And you talk to, we'll have people answering the phone. Tess will usually follow up. She'll give you a call. She'll get information from you about what your needs and particular concerns are, and she'll send out a checklist of things to bring to your appointment with me. So, for instance, a copy of a tax return. If you want estate planning, copy of estate planning documents. Investment analysis, copy of your brokerage or 401k statements. All of this is a part of planning. It's a comprehensive plan meant to help you. If you've got questions regarding Social Security, Medicare, we can help you with that as well. Taxation of Social Security benefits, how to minimize that. That's part of the planning. And I'll do this again at no charge to you. It's an opportunity for us to get to know each other and see if we want to work together going forward. So again, 615-376-5325. And when you come in to see me, I'll give you a free copy of my book, 7 Steps to Financial Freedom in Retirement. And part of this, by the way, when you come in to see me, I sit down with you and I go over all this, and depending on what your needs are, I may bring Friday in to meet with us as well to talk to you as far as tax issues and concerns, and maybe you need someone to help you with that. Also, if we get into estate planning, I have attorneys like Russ and Jack that have been on the show that we can also have come in and talk about estate planning. We'll match you up with the right advisors, the right team, all right, to get the most benefit to you for again, it's about attaining, whatever your lifestyle is now, at the very least, you want to be able to maintain that throughout your lifetime. You don't want to have to cut back in retirement. You don't want to have to worry about, the horror stories about, can I buy my prescription meds, for instance, or something, or even just the more basic. I don't run into that as much with my clients, like I say, but some things I do run in, they're so afraid to live.
Right.
So afraid to get out and enjoy life and do the things, the leisure activities that they want, to check off the bucket list, for worry that they may run out of money. We help with that to share strategies with you and show you how much you can have fun, how much you can put into that fun budget, that travel budget, or whatever the leisure activities are, and not have to worry about running out of money. Right. And that's what we all want, right? To really enjoy our retirement years. And it looks different for everyone, so that's why we do this personalized planning, of course. Yes. And that's why I say you need to get in and see someone, not just, please don't just do these on your own. All right, we're going to quickly crank through a couple of things here because I want to get that charitable. One is on divorce. Now, this is an area that changed, and this is going to be, it's good golly, right?
Think about it. Well, it's very simple. 2019, if you divorced in the year of 2019 or any year that's going to be following that, it used to be that alimony was a tax deduction to the person paying, and the person receiving, it was taxable income. So take this as an example. Let's say John pays $30,000 alimony to his wife. He's in the 33% tax bracket. So his tax would be $9,900. In her tax bracket, because all she makes is that, she's at 15. She would have only paid $4,500. So Uncle Sam has really basically got a way of being in the middle of a divorce. Not that you have enough problems in divorce, right? Now you've got Uncle Sam to deal with. So now, instead of, if you had divorced in 2018, you would have saved $5,400 in that small scenario, because now they're taxing it at John's rate, that 33%, and now his ex-wife in this scenario does not have to pay any tax at all. But that $5,400 did not go back into the family to help with the divorce or anything else. It's going to Uncle Sam. So just keep in mind when you're dealing with divorce nowadays, these numbers, I will tell you from experience dealing with other clients, are coming into the amount of money being able to be paid, because now John doesn't have that $10,000 almost that he has to pay to Uncle Sam, which he would have given all to his ex-wife. So now she might be getting 25 instead of 30. So
yeah,
really important to know those numbers and how it's going to affect your personal lifestyle.
I'll give you an example of this this is a way for the IRS to collect more.
Absolutely.
But unfortunately, you know, on the surface, it seems like, oh, well, you know, the person that's receiving the alimony is going to get this big benefit. But the reality is not so much. So think about if they were going to get $50,000, let's say, in alimony, and the person that's going to pay that alimony is in that 32% bracket, as Dr. Friday was just saying. Now you're talking about $16,000 in taxes that person is saving, right, when they pay that other person the 50. Now that 50,000, the tax rate on it's about 9%. All right, so you're talking $4,500. So that means net, the recipient of the alimony would have about $45,000, over $45,000 they would get to keep net income after tax. But this person that's now going to not get that $16,000, they're not going to want to pay $50,000, right? They're going to want to pay $34,000. Right. They're going to want to pay some much lower amount to reduce their taxes, and there's going to be a lot of difficulty in terms of working that out. And so net, the recipient actually is the one that's probably going to lose when it comes to what they're receiving when you start adjusting for these taxes.
Right.
So instead of, at least that's going to be probably $10,000 less that they're going to receive over what they would otherwise. Right. So something to keep in mind. Hopefully, in this, you know, if you're advising your kids if they're going through this kind of thing, this is a great way to get involved and say, you know what, this isn't something you want. It's a different approach. The divorce attorneys out there are scrambling trying to figure out some of these things as well. It's going to be a really interesting year or two as they try to get strategies in place. So make sure they get with someone that understands divorce when it comes to financial planning as well, to help them with that. All right, because most divorce attorneys and mediators do not understand how the nets of these work. All right, we're going to jump, we want to get into the charity part. Roth conversions we talked about. You have until, coming up on the end of the year, so you have until the end of the year to take care of any Roth conversions that you want. And if you're not sure if that's good for you, and please don't do it without checking first, because of the tax implications are can be quite severe.
No do-overs.
There you go. That's the new tax law change.
No do-overs. You can't make mistakes now. Otherwise, you're stuck and you're going to pay the taxes.
So make sure ahead of time that this is going to be in your best interest and what the tax rate's going to be through doing a Roth conversion. I'm going to jump into another thing for the end of the year. Yes. If you're 70 and a half, all right, or older, you're taking required minimum distributions. Now, those required minimum distributions are required to be taken out by the end of the year. Okay, there's an exception, and we'll come back to it. But for this purpose, here's something to understand as well. If you're giving money to charity, if you're giving money to your church through tithing, any charitable organization, tax-exempt organization, how about you were able to give that money and not have it be not worry about deductions? Right. All right, so as a part of your required minimum distribution, there's a way that you can transfer that money to the charity, that you can pay it to the charity direct from custodian, and it doesn't count as taxable income to you. Awesome. It's like getting 100% write-off without having to itemize. We're going to share a little more with you, but first we got to take a break. Join us here. We'll be right back on the Retirement Report.
Come to enjoy your golden years, but have you saved enough?